Hi everyone, today we're going to talk about the topic of inflation. So inflation is something that you have probably seen on your favorite TV shows, in newspapers, or having heard politicians talk about it over the last few months. So the question is, what is inflation? Right? So inflation is, in general, the rise in prices over time. Right? Prices go up every year. Things that we buy today are more expensive than they were 15 years ago. And that's because of inflation. And so inflation, we can measure it, and if you look at the graph here, we can see that it's just a steady increase in prices over time. Typically, though, we measure inflation as a percent change from the previous year. And so this graph is probably more used to what you would see on the news, as inflation's up 3% this month, or 5%, or whatever. And so it's a measure of how much have the prices changed this month compared to the same month 1 year ago. And that's what you see here in this graph. And it is the number that usually is reported in the news. Now, as economists, we typically use a specific measure of inflation that is called core inflation, which looks at the rise in prices, but it excludes food and energy. So one of the reasons we exclude food and energy is because these prices tend to be pretty volatile. Gas prices can change relatively quickly from one week to the next. Food, same thing. There's all sorts of factors that go into what causes the price of gas to change, the price of milk, bread, corn, etc. We're not going to really talk about here, but they're volatile, and therefore we tend to exclude them from our inflation calculations. The reason being is, if there really is inflation, we would expect to see that those costs would contribute to the costs of other goods. And so therefore, we use a core inflation to measure that. And so just to kind of take a look at core inflation over the last 50 or so years, we can see that recently we've seen a spike in inflation, up to about 3.5% in May of 2021. And so this is what has caused some politicians to be concerned. And so we want to kind of talk about what is going on here. So first, in order to understand this, we have to understand what are the causes of inflation. So there are two main causes of inflation. The first is what's called demand pull inflation. And this is where people want to go out and buy things, and the producers currently are not able to make enough of what they want to buy. And then there's cost push inflation, and this is when production costs increase and therefore prices go up. So whether it is the cost of raw materials, the cost of labor, wages, whatever it is, that's causing companies to have to increase their prices, that's cost push inflation. Demand pull inflation, people want to buy things, there aren't enough of it to buy, so prices go up. So historically, the Federal Reserve targets a 2% inflation rate. And this is something that over the last probably 20 or 30 years has become more of a norm for the 2% targeting rate. Not something that we saw in the 60s, 70s, and 80s, where we did see really high inflation. But we can see that relatively since about 2000, the inflation rate has kind of bounced around 2%. The core inflation has bounced around 2%. And actually, it's relatively been below 2% due to the Great Recession and just the nature of the economy over the last 20 so years. But we do see again that over the last couple of months, the inflation rate has spiked up. And again, this is May of 2021 compared to May of 2020, right? So inflation is up. So let's talk about what exactly is causing that. So we are having demand pull inflation, right? As people have become vaccinated, people are returning to their normal routines. They want to go out to eat, they want to go to movies, they want to go to theme parks. And so they're starting to spend money on these kind of things that they used to do before the pandemic. However, over the last year, companies have laid off workers because there just wasn't the demand for products. And they cut supplies because people were buying less. And so now inventories are temporarily low in a lot of the companies. And this isn't just true of services. This is true of cars. This is true of the number of flights that people take on airlines. And so there's all sorts of things that are contributing to this, most of which should be short-term and stabilized, right? Car prices, especially used car prices, are one of the largest contributors to the inflation in May. And so there are all sorts of things that are contributing to this that we expect to be short-term and should stabilize in the coming months. So this isn't something necessarily that should be too much of a surprise, considering that last year was such an abnormal year with the pandemic, and now that we're coming out of it, and companies have to kind of play catch up, and that's what we're seeing. There's a lot of people that want to do things companies aren't ready to handle the volume yet, as it increased really quickly over the course of 2 months. And so what we're seeing now is that companies are raising their prices to adjust for this. This should be short term, and we would expect to see it stabilize. The other thing that is happening is something that is called the base effect, right? So as I mentioned earlier, inflation is measured comparing a month increase in the current year to the month increase last year, right? Last year, inflation was at very low because prices actually fell during the pandemic. So if we look at the consumption expenditure index before we adjust for the month-to-month increase, we see that in March, April, May, June, July, that there was this dip. And the dashed blue line shows the trend kind of where it would have been had that dip not occurred. And so the base effect is the fact that there's this gap. And so just so we can see how the inflation rate is calculated, it is the current point of inflation this year, right? And it's going to be at the rate of change to the inflation point last year, which are the 2 points we see here. The base effect, though, is showing that because of this abnormal dip, we really would have, had the pandemic never happened, we would be measuring this green line to the top line. And so this gap between the green dot in May and the blue dot in May is over 1%, right? So the inflation rate was about 3.5%, core inflation was about 3.5% in May, and about 1% of that can be contributed to what we call the base effect. And that is just simply that due to the nature of the mathematical way that the inflation rate is calculated, the abnormal dip due to the pandemic is going to make it look larger, the percent change larger than it probably actually would have been had the pandemic never occurred. Right? So should we be concerned? No. Base effect is going to be adding 1 to 2 percentage points month by month for the next couple of months, and going back to May, or to April. And the high prices of durable goods, they usually aren't major contributors to the inflation rate, will stabilize. So it isn't really something that we should be panicking about yet. Politicians of the party that's not in charge love to seize on these things and talk about them, but they aren't something that economists are overly concerned about. And so in fact, we see here that this graph shows what the expected inflation rate is over the next 5 years. So this is coming from investors, people that are experts in the field. They're expecting that in 5 years from now, the inflation rate is going to be 2.2%. So again, not something that is extremely concerning to investors. Is it something that could happen? Yes. High inflation is something that is possible. Is it likely to happen? Probably not, but it's not something that we can totally write off, right? So politicians that express some concern about it have a little bit of merit, but we should take it with a grain of salt. Many of these same politicians in 2010 claimed that there was going to be a massive inflation crisis, and that never came. But yes, it's possible it could happen. So inflation is something that can be a bad thing for the economy, right? If the prices go up, then it makes everything that we buy more expensive, and it diminishes our purchasing power. And that's especially devastating for lower income people, because the money that they have now goes to less. And so inflation is something that is to be potentially worried about if it is something that comes to fruition. However, the good thing is that the Federal Reserve has policy tools to deal with inflation, mainly to raise interest rates. Interest rates are very, very low right now, and the Federal Reserve plans to keep them that way for the coming year or so. If inflation starts to tick up and starts to become possibly more concerning, the Federal Reserve could raise interest rates, which would slow economic activity, which would lower the demand pull effect of inflation. So yes, inflation is something that happens. It happens every year. It's been happening every year for decades. We are coming out of a major pandemic. The base effect, along with just the changing dynamics of businesses as they try to catch up, is contributing to this. Many economists think that this is something that is going to be short term. It is possible that it could become something more prolonged, which in that case, the Federal Reserve has indicated that they will take action to raise interest rates. So something we'll keep an eye on, and if things change, we'll give you an update. But as of right now, that's what's going on with inflation. Nothing really to worry about at the current moment.